What's up, everybody? This is Jimmy with Trading Decoded. It is December 9th, 2024. It's 3:46 in the afternoon, and I'm aware the market is still open, but we closed it down at 3 o'clock because kids and stuff. But with that said, today was very similar to the last 5 days, at least in the first half or the first part of the morning. The key factor that is common between last Friday, Monday, Tuesday, and Wednesday of last week, in the Friday prior, which everybody is saying are difficult trading days, I don't disagree. But understanding why they were difficult is important because it's not hard to realize when it's a day worth trading and a day worth potentially skipping, right? Or at least forcing yourself to have the patience and discipline to wait for this particular circumstance to change so that it becomes more comfortable and more beneficial to trade. Okay, today was that as well. Now, all of last week, the one thing in common that made trading difficult was low volume, low volatility. When you are trading options with low volume and low volatility, they don't move in value. Furthermore, there's no follow through in the moves, right? So it makes it very difficult to have confidence in your trade, makes it very difficult to get into a trade. And even when it makes the move, if it makes the move you're hoping for, it didn't pay you anything. So a lot of things happen to people in that situation. First and foremost, you start to say to yourself, hey, I didn't make enough money on this trade. Let me hold it a little longer. So immediately your mind goes into ignore the chart, ignore the fact that you're sitting up against a resistance or on a support, because now you're chasing money in ignoring the chart to do so. The chart is your master when you're trying to trade. Okay? I'm not saying it's a god or anything, but the chart is what dictates when you should be getting in and out of your trades, not your profit and your loss. Okay? So if you get into the habit of saying, hey, this thing did what I knew it wanted or what I expected it to do, what I hoped it was going to do. We closed below support. We made it down to the next support. Great. Under any other circumstance, you would say, we're on support. I'm in puts. Let me get out. But because you didn't make enough money these last few days in that same trade, you say, well, I'm only up a few bucks. Let me hold it longer. Now, the problem is if you hit a support that ends up holding and it goes the other way, yes, the trade starts to go against you, albeit as slow as it was going forward, it's going against you, which leads to another problem. If you're in a trade that's not necessarily doing what you hoped, but it's not aggressively going against you, meaning it is red, but it's happening at such a slow pace, you get the same false sense of security that, hey, this is not moving very much against me. You're not getting completely panicked or anything like that. And you decide to hold on to the trade longer. Even though it's between theta and the contracts moving against you, it's happening at such a rate that you don't feel inclined to get out of the trade because it doesn't hurt enough fast enough, right? And then you get yourself into all kinds of trouble because at some point it does hurt enough, but it's too late. It hurts so much that you can't bring yourself to get out of the trade. Instead, you'll hold it longer, hoping that it gets less painful, and then you'll get out of the trade. We've all done this. This is the way trading affects our brains and our emotions and all these things constantly. You can't get around it. You just got to respect the rules, trade the chart, and move forward. However, I say that to say this. We found a trade to take this morning that was a little aggressive. It was during a time of low volume, so it didn't feel comfortable. And the one thing I brought up to our community and to you, if you're watching, if you took any trades prior to 10:15 this morning, you probably took those trades with some hesitation. And at the end, even when you were green, if you were green, you probably felt like you were kind of lucky to be able to walk away with some profit today. These are not circumstances that you genuinely want to trade under, okay? If you know that the volume is low, it's not difficult to see it. It's not difficult to tell. If you know the volume is low, or if your contracts that you normally play are a lot less expensive than they normally are, that's telling you volatility is low. It's going to be a difficult day to trade unless volatility and volume picks up. Okay? Please recognize these factors. We saw this before the market even opened today, and you can do the same. There's no secret to it. Check your volume, check the volatility. If it's low volume, it's probably going to be low volatility. You probably only need to keep an eye on volume, right? If it's low volume, don't expect follow through on the moves. I'm not saying it's impossible, but be hesitant. Understand that that's going to not allow your contracts to gain value as quickly as you might be used to, which just opens up Pandora's box for the domino effect of potentially negative things to continue to happen should you take a trade. Now, with that said, let's go ahead, open up the chart, and recognize that we had a pretty tight pre-market range. As you can see, there are no call put lines on my chart today. Why? Because I didn't feel like it was good to incentivize aggressive trading today. Why? Because volume and volatility was low. Okay? Now you look at this, we did have some people, because I did say if the Qs can get below this pre-market midline, it was probably going to be a nice drop down. Now, with that said, the reason I said that was because we recognized how strong of a level of support that was from Friday and today's pre-market. Okay, my belief was that if we can get through that, we should head down to the next orange line, which was here. And if we get a close below that, that's a long way down, but we'd love to see it make it all the way down to this support. Now, you guys are watching in real time on a 30-minute chart that we did close below that, and we did go straight down to that level where we struggled to move lower. Okay, ultimately, we did get lower and so on and so forth. But nonetheless, you need to be cognizant of where. Now, with that said, some folks, not myself, jumped into puts early. They got paid, not as much as we normally would on that trade, and they were done for the day. And in a sense, I envied them because I didn't feel comfortable enough to take that trade. I wasn't looking for calls to the upside unless we got above the orange line here on SPY and unless we can get above the orange line here on the Qs. Okay, that's what I was looking for. Well, Jimmy, when would you be interested in taking a trade? Well, I just told you what I'd be looking for calls. Also, I want to see ADD rotating to the upside. Okay, so this was a nice big green candle for ADD, but that was as high as it ever got today. And then it just kind of trended down ever since then. All right. But what I wanted to see, I told everybody, I said, I would like to start with a lower high on the Qs. Well, the lower high on the Qs, actually, we were looking here because this is where we were talking about it on 938. I said, guys, this looks like it's going to be a lower high in the Qs. I'm going to take my puts here. Now, mind you, we can't see the future, but lower highs usually mean that we're going to break support, not hold it. So with that belief and understanding that statistically, that's typically how it works, I'm going to get in aggressively on this, which was here. I'm sorry, here. And I said, hey, let's see if we can ride this thing down. Now, at this point, ADD was pretty much moving sideways. At this point, I was following the Qs. Qs didn't make it all the way down to the support. As luck would have it, and because of this, contracts not moving very much at all, we got in, at least I got in, I know several other people did, and when we got down to this support here, we were doing a line-to-line trade on SPY. Qs was trending up at this point, didn't feel comfortable enough to want to hold on to it. Glad I didn't, but as we neared this line of support, we suggested getting out of the trade. That one there paid anywhere from 15 to 20%, depending on when you got it, okay? But again, uncomfortable trade. That feeling of lucky when we got out of that is what I was talking about a couple minutes ago in this video. So once we decided to put that away, at this point I said, you know what, unless something changes, that's going to be it for me on the day. Now, this has been my lowest traded month to date. I know we're only 9 days into the month, but I've taken fewer trades and have more no trade days this month than I have since I went full time in September of 2022. It's also my least earning month so far since we started as well. So, you know, the market's a little off, right? Things are a little different, slowing down. We're up 30% on the year. I mean, it's kind of a strange thing. I don't know exactly why volume's dropping. There's a lot going on, so I'm not going to worry about it too much. But point is, we needed to wait for something to change. And when this change comes, which happened just after 10:10 this morning, Eastern time, volume started to pick up and volatility started to pick up. And as luck would have it, I don't want to call it luck, but the beauty is when that changed, so too did the things that normally work for our trading change as well. And that's when we started to pick up and find additional trades. You could see there's a very, very lackluster amount of arrows on this chart today. And the reason is because I wasn't aggressively trying to trade. And I really didn't feel good about anything as far as trading until volume started to pick up. We got below the pink line. We started to put in lower highs and lower lows, right? ADD started to trend down. Qs started to trend down. So when we got down here and we closed below the support here, told everybody I'd be interested in a pullback on the Qs. Volume is increasing. Let's see if we can pull back to resistance. Let's see if we can continue down, lower high, break through supports, all the things, okay? That's when we started to find these trades. So the second trade of the day for me was at 1032. As I said, ADD was starting to dump, which was good. SPY, 1032, pull back to resistance. Let's see if we can leg down. Now, originally, we were hoping to at least make it to this line of support here. If we can get through that, we're looking for any one of these three lines down here. But at 1038, Qs made it down to their line of support. Now, again, you see these dotted lines here. The real lines of support on the Qs are this solid orange one here and this one here. Now, if you guys remember on that big candle that I was talking about, this is the space that we're filling. Now, what these dotted lines are here, let me get rid of this alert here. What these dotted lines are here are basically Fibonacci levels in between that vast area of space, okay? And now you may not choose to believe that they work, but they are mathematically calculated, and it's eerie because I had all these lines here way before the market opened. And as you can see, we got through them. We found support on one of them. We found resistance on one. We tried to hold support. We couldn't get back down. Now, admittedly, we broke through that one, but they're decent, albeit not proven levels of support and resistance, but they do work often as levels of support and resistance. So I don't ignore them, okay? And I only add them when we have a space between lines of support and resistance that exceeds 90 cents or more, okay? How I add them, well, those are reserved for our charting sessions and stuff, but it's not difficult. Again, it's a Fibonacci retracement levels, so you can figure it out. Otherwise, jump into one of our charting sessions, which I have on Tuesday mornings usually, and you'll hear all about this stuff. This is not a charting session. This is what we did today and why we did it. But long and short of it is, this was a beautiful, huge area down. I didn't expect it to go from this line and make it all the way down to this line. As you can see, it wasn't a straight down move, and it had some pullbacks. But if you got in at the right time, you could have chosen to get out at any one of these levels of support and wrote it down quite a bit. So our first target was here because of support here, and I believe Qs was hitting support at 1035. Which was right here. Yeah, so Qs were hitting the same support that they bottomed out at so far. If you want to stay in this, well, keep ADD on the radar. If ADD is still printing red and you know, we're in a downtrend on the Qs, we believe if we close below support, we should make it down to the next support, so on and so forth. Now, in this case, that stopped being true, right? We landed and closed below a line of support, not really support, but fib support. And so we're hoping to continue down to the next one. It didn't. So you stop yourself out of the trade. When you close below these lines of support, now what was going on at 1038 on ADD? Yeah, so ADD was still trying to trend down. And that's what we're looking for. Now, some folks in our community stayed in that trade. And while we moved down and we got through all these levels, I said specifically, guys, if the Qs make it down to 523, to 521.23, you better tighten up your stop losses because that's another strong level of support. Where does that come from? Well, let's go back in time and I could show you. You see this right here? See this level right here? And over here? Lots of touches tried to get through that and couldn't. Ever since we closed above that line all the way back here on December 4th, we have never been able to successfully stay below it. Meaning we come down, we touched it a bunch of times and bounced off and continued up. You could see it happened right here. This is that bounce I was telling you guys. So again, I'm just using the chart to recognize where the strong levels are. And if you're inputs and we get down to that, I'm going to recommend that you move your stops down, hope that it breaks it. But if it doesn't, you made good profit. You don't get caught up in this pullback, okay, which bounced pretty hard, pretty aggressively. After that, that was all the way down here. And yes, we did have a couple of people hold this put trade all the way down there and they got paid. All right. After that, we didn't do much because not a lot of people felt comfortable with calls after a move down like that. Understandable. But some folks, some did find reasons to take calls. And if you are looking for reasons, again, I would say to you, make sure we're putting in higher lows, get above a level of resistance. Make sure there's enough space between one resistance to the next. Play that space. So, you know, that would be my advice to you in that situation. All right. Now, we go to lunch. Okay. And before lunch, I told everybody, and I did after I got back from lunch too, I would be looking for calls if the Qs, oh, I didn't put my arrow there. Let's see, 137. Let's go to Qs here. 137 is right here. Okay. Told everybody I would be interested in calls if the Qs can get above this resistance right here. 523.42 was the number I said. And where I expected it to go, if we did, was up to 524.01. I said it's about a 60-cent move. Okay, and that would be nice. Well, as not luck, we didn't make it all the way up there, but we got close. So several people, now I didn't because it's after 12 o'clock and I don't trade after 12 o'clock, but we're coming off higher lows. We're expecting resistance to fail. You could get in, we breached it, we closed above it, we stayed above it, and we moved towards our next resistance high. Admittedly, it didn't make it all the way there, but what that generated on SPY was a nice move to the upside. This was a beautiful move to the upside. Okay, and at the time, ADD was kind of just flat, 138. 138, where's ADD? Yeah, so ADD, oh yeah, it was right over here. We got a nice injection of buyers up here, and it continued to move up. Now, here's the interesting part. I know you're watching this and you're saying, well, Jimmy, it's ironic that you have an exit right at the very top. I know. And only people who were in there will believe that we called the top perfectly. But I'm going to explain to you what I saw that made me say, guys, you might want to take yourself out of this trade. I know we haven't made it to where we're getting to on the Qs, but we're close. That's where it started. Okay, we're close. We were hoping the Qs were going to get up to this 524.01, 524.02 level. We're almost there, but more importantly, on ADD, we started to print some red. What time was this at? 151. So 151, I should have put our arrows on the ADD chart too. At 151, yeah, we're looking over here. I said, guys, ADD looks like it's struggling to move higher. SPY looks like it's struggling to move higher. We're at resistance on SPY, and ADD and Qs are close enough to their resistance. You might want to take yourself out of this trade. I would. Now, I'm not in this. I'm just calling it like I see it. Look at what happened. Now, I would have never guessed Like I wouldn't have played puts here because I believe it's just going to crash down. That was not my intentions. My thought was, hey, is things struggling to move higher? Lock in your profits. You got in at a great place. We got out at a great place. Take your profits. I don't know if it continues to go up from here. And when I say stuff like this, I tell you guys, if it does continue to move up, I apologize in advance. But from what I'm seeing, this doesn't feel good for continuing up. If you want to stay in the trade, put a stop loss somewhere up here to protect yourself from this. Okay. Shortly thereafter, I said, well, if we can get through a level of support on the Qs, with space to go, we'd be hoping. So your first level of support would have been right here. You got that potential at 2 o'clock. We broke support off of a lower high, closed below support. We're looking for it to at least make it down to 523.10. If we close below that, we're looking or hoping for a continuation down to 522.63. Okay. So at 2 o'clock, we got our entry candle because Qs closed below support, and we brought it all the way down 206 to this level. Now you're asking, Jimmy, why would you stay in that trade longer? What were you looking at? So again, ADD started to get aggressive to the downside. And so we were looking at staying in the trade longer because ADD was no longer trending up and it was printing big red candles to the downside. Okay, so at 2 o'clock, we closed below support. And at 206, Qs had made it down to here, which is getting very close to our target of 522.64. In fact, it was 5 cents off. So the 5-cent rule. Okay, but again, we pulled back to resistance. We started to continue down. Things were looking good to the downside. That was the last trade we talked about. Now, obviously, if you stayed in this trade, you could have made a lot more money, but this late in the day, any pullbacks, even something like this, probably would have taken most of the profits you made. If you got in up here and held through this, you were probably back to break even, maybe even a little red at this point. So pulling trades this late in the day on same day expirations is sketchy. It's uncomfortable. So if you're going to do trades after 12 o'clock, 2 o'clock, whatever number you want to use, it's probably best to go to next day expirations. No, you're not going to make as much money on these moves as you would with same days, but these pullbacks hurt a lot less. All right. And as you can see, all these levels that we had down here worked a charm. I mean, they work well. You just got to trust them, know how to play them. And that's what we do in here all day, every day. So with that said, we're going to wrap it up. I hope you guys got some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. As soon as you show up, it's free for the first week. I've got the final copy of my book in my possession. I'm rereading it right now. From here, we'll be putting it in to get a hard copy production piece so we can look at that. And once that's good to go, it'll be available for sale for anybody who is interested in it. Now, if you're in my community and you're able to spend your time in the room with us, there's nothing secret in that book that you don't already know. Now, a lot of people are going to buy it because they want to support me, the author of the book as well, who was a good friend of mine, Jonathan, who's one of our members as well. Or you want something in black and white to read and, to reiterate the rules and everything that we look for in these trades on a daily basis. But it's mainly written for people who don't have the luxury of being in a Discord community because you're at your day job, right? This book is designed for people who know a little bit about trading, right? We don't get into what is a call and a put. We suggest that you go learn about a couple of things which are mentioned in the book before you try and trade the strategy. But it's very easy to read. It's very easy to understand. It's not over technical. I think it's going to be something you guys might like. But if you're interested, just be on the lookout for it. I will post a link to it when it is available. It should be by the end of the year, maybe the first week of January. We'll go from there. And with that said, thank you guys for watching. Till tomorrow, I love you guys. See you.